Hey guys, how's it going, and thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't. Don't forget to subscribe for more videos. So let's get started. So in this video, guys, we're going over some of the best financial advice that we could learn from our friend Warren Buffett. So he's been around for quite a while now, and if you don't know who Warren Buffett is, you might be considered a bad investor. But we could all learn a lot from him, and that's why I'm going over 5 financial advice tips and tricks that he has taught like the world at this point. I also have a bonus tip at the end, and I'll leave some timestamps in the description so you could skip around if you like. This guy fascinated me because he's achieved incredible things. The amount of wealth he's created, one of the most wealthiest people in the world. So a lot of people look up to him, obviously. So without further ado, let's get into those tips. First piece of financial advice from Warren Buffett is invest in something you understand. So if you don't understand cryptocurrency or Bitcoin, then don't invest in cryptocurrency and Bitcoin. Not saying that it's a bad investment, not saying that it's a good investment, but if you don't understand what the heck it is, then you don't know what's going on with it. You don't know if it's gonna continue to go, if it's just gonna drop off the face of the earth. You got to keep up with it, and that goes for all investments, not just crypto. We could, like bonds, stocks, real estate, commodities, just a bunch of things out there. So if you don't understand something, Warren Buffett highly recommends to not invest in it. At least understand like the basics, like what the company is, what it sells, like its products, its services, how it makes money. Start there. Moving on to the second piece of financial advice from Warren Buffett is that stocks are better than bonds over the long term. Now, of course, stocks are considered more risky than bonds, especially in the short term. Like right now, the stock market is crazy all over the place because a bunch of stuff is going on. So if you have like something that you're saving up for in the near future, like a car, a house, or whatever, stocks might not be the best idea. However, Warren Buffett is saying for the long term, and long term being like 5, 10, 20, 30 years, stock in any 10-year period throughout history, stocks have always outperformed bonds. So if we're thinking of a long-term perspective, technically, it might sound backwards, but technically, bonds are more risky than stocks because they're not returning as much, so you have less money in the future that it grew. It's gaining less of a return versus stocks, historically speaking, are outperforming. So that's why if we're talking about, especially for retirement, it's actually not the safest, but the most sure investment to grow for the future, keeps up with inflation, and you're investing in a business. It's a company. It's not just like a number on a screen. Businesses tend to grow over time, at least good businesses. But they increase their prices. They innovate more. They grow. And that's exactly what stocks do over the long term. So, no one really regrets if they hold a stock for like 10 years. No one looks back 10 years ago, it's like, nah, I shouldn't have held it. Most of the time, stocks are higher. Now, while you're holding those stocks, moving on to the third tip from our friend Mr. Buffett is reinvesting our earnings. And you can look directly at his own company, Berkshire Hathaway, because that company does not pay a dividend. And he has said multiple times he will never pay a dividend even after he retires. Like, the people that he's training are probably never going to pay a dividend either. And that's for a reason. Now, if we think about it, why should, let's say, Berkshire Hathaway give out a dividend to its shareholders when it could reinvest it back into their operations to get more earnings? So that's definitely one of Buffett's strategies. The market also, historically speaking, most of the returns are actually from dividends. So if you reinvest that it grows exponentially, also leaning toward compound interest. So you're making money off of your money. That's how the rich grow their wealth. Just look at Mr. Buffett. He's got dividends. He got a bunch of money coming in. He's actually sitting on like a large cash pile right now. But he's able to reinvest that. And that's called a dividend reinvestment plan, a DRIP. Some brokerages have that. You could set it up like that. So instead of like just getting cash in your holding account, it reinvests back into the stock you hold. The fourth piece of financial advice would be to not listen or even look at the news or even headlines. Now, of course, you could definitely see recently these headlines and news have been all over the place. So sometimes things get over-exaggerated, sometimes things get under-exaggerated. The stock's price is essentially the perception of its value. So if you trade a stock just purely based on like a headline, Warren Buffett is saying that's absolutely ridiculous because most of it's just a joke. Do not worry about it. It's based on human emotion. And that's usually what makes like a good investor versus a bad investor. Like, yeah, there's of course like PE ratios, EPS, all these things. But it all really boils down to human emotion. A news story might come out, earnings might come out, and you might get scared from it, and then you sell out of it. Or, you know, there might be a hype going on, and then you buy into the hype. And it's all based on other person's perspectives. And sometimes they're straight up rumors that aren't even true, and it just, like a stock could rally, essentially for no reason, so then it drops back down. That's why you should do your own research. Now, the fifth piece of financial advice from Mr. Buffett I found very interesting is something relating to diversification. He states that diversification is protection against ignorance. It makes very little sense if you know what you're doing. And if you really think about it, yeah, like if you are sure of something, I mean, no one's always sure. There's no like guarantees in life. But if you've done the research, you ran the numbers and everything, not only for stocks, but for businesses, maybe if you're in real estate, and you like have a plan and like it's going to go forward and you're going to stick to that plan. If you're so sure in that, why should you diversify around so many different companies? If you're so sure in something, you should stick with one of them. Now, of course, that might be just in theory, because if you invest in like one stock, one business, whatever, that's definitely risky. If it goes down, then that's like detrimental to your portfolio and to your life. But another piece of advice relating to this diversification idea, I forgot the number that he stated, but let's just say it was 5. But he says that if you only have 5 choices, like 5 investment choices, through your entire life, you would take a long time and a lot of research into each of those investments. You wouldn't over diversify. You wouldn't like pick stupid little things and hope that it goes up. You would put a lot of dedication into researching and developing each of those investments. That's how we should think of investing. And like I promised you guys, the bonus tip, the bonus financial piece of advice from our friend Warren Buffett and from a lot of people out there, financial advisors, normal people, millionaires next door. But that piece of advice is living below your means. Living on less than you make. And if you don't do that, you're essentially setting yourself up for failure. If you are living at or above your means, you literally have nothing else afterwards. Then you're just living on what you're making and you can't get ahead that way. Look how Warren Buffett lives. He drives an old Cadillac, lives in his old house, goes to McDonald's every day. It's nothing extravagant. He's content with what he has, even while being a billionaire. And one quote that I love that I heard from him makes complete sense. You shouldn't save what's left over from spending. You should spend what's left over from saving. A lot of you probably heard this before, that you should pay yourself first. Put money in your savings account first. Invest first. Build something on your own first, and then what's left over, then you could spend that. Because if you do it the other way, if you spend, what's left over after that, usually nothing. So that is some financial advice from our friend Mr. Warren Buffett. Thank you so much for watching, guys. So if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. Which piece of financial advice is your favorite from Warren Buffett? Or is there another piece of financial advice that I didn't mention? Because he has tons of golden nuggets out there, and I love listening to him. He has, tons of wisdom, and we all could learn a thing or two about him. So thanks so much again for watching, guys, and I'll see ya in the next one.